Welcome back. Let's quickly track a couple of stocks that will be in focus this morning. Interglobe Aviation is important to track. We learned from sources that the Gangwal family will sell up to 2.8% stake for 2,000 crores in a series of block deals. The indicative price of the block deals is 1850 a piece, and the Indigo stake sales should be done at a 6.5% discount to the current market price. Mark Martin, who's been tracking this space very closely. He's the CEO of Martin Consulting as well, joins in. Mark, good morning and good to have you on the show. You know, this is something that Rakesh Gangwal had indicated earlier, that he would sell his entire holding over a period of 5 years. So it doesn't come as too much of a surprise. But your own thoughts on how to approach this?
Morning, Sonia. Thanks for having me today. I think this is, apart from this selling the price of the stock all crazy and haywire, clearly Rakesh is testing the waters with the stake he has now. 2.5 or 2.8% that's been reported is it's a wafer thin stake of the in excess 35% plus holding he has in Indigo. So he's clearly testing the waters to see what he could get. I don't think this is going to create much of a dent with Indigo from a management, operations, and oversight perspective. Mr. Gangwal is a very smart, astute, and a shrewd investor. So, I mean, this is more strategic, and I don't think we should be reading too much between the lines.
Overall, on the business itself, how do you see things, Mark? Because, clearly things are picking up, right? Travel is back. Crude oil prices have fallen substantially. And Indigo has been doing much better than its peers. But there's a lot of competition at the same time. What's your view on how things could move from here?
Correct. I think Indigo's the most important thing for them would be to write off the losses they've had over the last 3 years. They've got an uphill task with their whole game plan. Indigo needs to now look and focus more with expanding globally as opposed to increasing any further more flights in India, because they're already quite saturated in the domestic market. And the domestic market, I think, is where we know you are exposing yourself to higher amount of risk. You are exposing yourself to competition. But when you have 290 plus aircraft and you are at pole position with market share, you're not going to worry too much about the competition creating a dent in terms of your market exposure or your product offering. But let's not forget, Air India at the moment is creating a monster in the basement, and a fully rejuvenated, revitalized and revived Air India in 24 months is going to create a dent with everybody. At the moment, it becomes very strategic for Indigo to look at global expansion, because they've expanded enough in India, and reaching out to a wider global Indian diaspora is key. Separately, I must also point out that Air India will at some point in the next 36 months also look at coming up with an IPO, because they will look at phase 2, phase 3 funding as part of the growth strategy. So clearly interesting times, and something which, I think every investor should keep an eye out for aviation stock coming up.
Mark, just to go back to that earlier point of Mr. Gangwal selling the stake, you said it's test waters, which basically you were implying that there is, once this goes through, there is going to be, more to come, a steady stream of more blocks?
Hi, morning. Yes, I think, 2.5 or 2.8% is a very, very thin stake. And I'd be worried and surprised, and I would be more, aligned and tuned into a crisis if we're selling a 20 to 25% plus. So this is just to look at, what can he fetch in the market from an overall interest level. And I don't think he'd want to do anything to jeopardize Indigo's position, irrespective of his exit being tumultuous. Gangwal isn't the kind of guy who would be vindictive and want to cause any harm to Indigo, an airline that he helped start and create himself. So I don't think it's fair that we start looking at a panic phase here. But what I would like to say is that there would be more stake sales coming up, and this should be. And I would much believe that he would look at offloading this to larger financial institutions and and fund managers in particular.
Got it, Mark. Thanks a lot for joining us today. That's Indigo down about 0.8% for now. Ashish Chaturmota is joining us. The pre-open rates are in, by the way, and what stands out is the dollar rupee. What's clearly telling you is that yesterday there was resilience when the dollar index was 110.5, and today, of course, with the dollar index also retreating, there's quite a bit of gain that you're seeing. So 80 clearly is being well defended. 79.71 now on the dollar rupee, and of course Brent is another positive. So in terms of macros, clearly there are some positives, and that's helping our market. A lot of names like ICICI Bank doing well. Infosys, where there's a buzz that once the lock-in for last buyback ends today, so the chatter would be, when would the next buyback be? Will this come with this earnings season or after that? Normally Infosys keeps a bit of a gap, but that's the chatter in the market right now. Ashish Chaturmota is joining us for some FNO calls. Ashish, hi, good morning. What would be top calls?
Hi, good morning, Prashant. So yes, I think see the way the markets are consolidating between 17,500 to 17,800, it looks like today is going to be a decisive breakout day. So eventually we expect index to hit 18,100 kind of trajectory. Keeping that in mind, I think my top pick would be Adani Ports. Adani Ports, we have seen a very good consolidation for last 2 years, and in the last couple of trading sessions, there is a consistent buildup of positions into the stock. We believe manufacturing exports is going to be tremendous, and if that is the case, then Adani Ports would be a natural beneficiary of that mega trend. 855 would be my trading stop loss for going long into the stock. In the immediate short term, expecting stock to hit its previous all-time high of 930, but positionally believe stock is poised for 1,050 kind of levels in next couple of months. Second pick would be ACC. So both ACC and Ambuja have given a decisive breakout on the monthly charts, and ACC after consolidating for good 10 to 12 month kind of time frame has seen a very strong volume based breakout in yesterday's trading session. So here one can initiate a long, keep 2350 as a trading stop loss. In the short term, 2500 would be my short term target, but positionally expecting stock to hit 2600 kind of trajectory. Capital goods is looking quite strong, and within that, Cummins is one stock which looks very promising. This is again a multi-year breakout. 2015 stock made its all-time high, and eventually after 7 years, we are seeing those levels getting retested. So eventually, stock is poised for a decisive breakout. Keep 1210 as a trading stop loss. In the immediate short term, 1320 would be my short-term target. And last but not the least is Aditya Birla Fashion Retail Limited. A very strong consolidation breakout happened in the stock. So keep 314 as a trading stop loss, or positionally we expect the stock to hit 350, 360 trajectory.
Okay, Ashish, thanks a lot for those trading ideas. The pre-open is now, almost aligning itself with what the SGX Nifty was telling us. 116 points higher is what you have. It's 907 right now. It's the pre-open rates, of course, settle at any random time between 907 and 908. So let's see how the final rates settle down. Maybe it will somewhere around here now. So gives us a good time to get the 910 calls. So Darshan, so the gap is 17,746. Maybe above your comfort zone, given your stop losses. So what's the call now, and what would be your 910 stock idea?
No, the call would still be to go long after the first 10-15 minutes, and naturally the stops have to be raised to the lows that were recorded in the first 15 minutes. It won't be 600, but I would be trading on the long side in both the Nifty and the Bank Nifty. Petronet is a buy with a stop under 213.
Okay, Petronet LNG is a buy for Sudarshan for 910. The pre-open has now settled 123 points higher on the Nifty and 308 points higher on the Bank Nifty. Amitesh, your 910 call?
Anuj, I have all buy calls, so I go with a long call on Dalmia Bharat with a stop at 1580 for targets of 1655.
Okay, thanks a lot for that. So in pre-opening, suggesting that the market is opening with a big gap up. A lot of stocks which are beneficiaries of lower crude are surging higher. Asian Paints is the biggest gainer, up about 1.5%, followed by a couple of tire names. But let's go across to Nimesh. Very interesting note from Morgan Stanley on engineering, research and development companies. Nimesh, over to you.
Hi, Sonia. So I took this as a standard report because it's a bit of a non-consensus view which has come from Morgan Stanley. So they've initiated coverage on two companies within that ER&D space, which is Tata Elxsi and L&T Technology Services, both with an underweight rating and a target price on Tata Elxsi is at close to 5,800, which is much lower than the current price. And even on L&T Technologies, they have an underweight rating with a target price of close to 3,000 rupees. So again, more than 10% downside from current levels. Now, they've done some case study on the auto industry, and that suggests that there's going to be a slower R&D growth over the next 3-4 years from now compared to the last decade. So on back of that, they forecast both for Tata Elxsi and for L&T Technology Services, the revenue CAGR to slow down to 15% and 11% respectively over the next 3 years. So which is going to be much lower than what they saw in the last couple of years. The stock is, both the stocks are actually baking in a 20%, and 16% revenue CAGR for the next 5 years, which is going to be too optimistic, and the valuations do not suggest any meaningful upside. So on back of that, underweight rating on both L&T Technology Services as well as in Tata Elxsi from Morgan Stanley.
I mean, what 40% downside is what Morgan is saying this Tata Elxsi has, according to their price target on that particular company. But I mean, the move has been went to 10,000, and the fastest recovery in any of these tech stocks was in Tata Elxsi. Is now down to about 8,800 or so, 8,835 this morning. It's about 0.25% higher than the pre-open. Abneesh Roy is Executive Director and at Institutional Equities at Edelweiss Securities. Abneesh, great to have you with us here. Good morning. Thanks very much. Now, NCLT has directed Zee to convene a shareholder meeting on the 14th of October to consider the Sony deal. Abneesh, finally, it looks like this is now starting. I mean, this entire process is now formally starting. How do you look at this? Any implications for the stock at this stage? Because at the end of the day, is there any real obstacle to this one going through?
Yeah, thanks, Prashant. Yeah, clearly this is a positive development. This is the next concrete step in the NCLT. This is positive because if you remember, exchange approval was extremely delayed. So investors were not at all happy with the kind of delay which happened in exchange. But in case of NCLT, this has come within few weeks. Of course, the NCLT process takes a lot of months, but clearly this is a positive. I don't see shareholder approval being an issue because obviously this is a win-win for the shareholder also, for the company also. Also now, if you see in terms of outlook, clearly with crude oil collapsing, very good news for FMCG companies and other companies. So advertising outlook will be good. We expect that for FMCG paint companies, there will be 200 bips gross margin expansion, H2 versus H1. I think a good part of this will come back to advertising. That's good for all media companies. On the CCI bit, I think this is routine. In any large merger, there will be questions. But unlike a cement merger, for example, where the factory would need to be sold, this is content, right? If you close a few channels in the worst case scenario out of so many channels, I don't think it really impacts the business too much because this is about content. So this is good. We are positive on Zee.
Okay, positive on Zee. So what is your long-term target price at this 260 price? How does the risk reward look?
See, risk reward is quite favorable because at 14-15 times we are getting a company in which now post the merger, the CG issues will get resolved. The white spaces, for example, in sports, Sony has got a much stronger bouquet. Also, in terms of a lot of the other general entertainment, also the white spaces will get filled. On the board, we'll have only Puneet Goenka from the current promoter family. It will be a professional board with a professional as the chairman. So very positive, I would say. So yes, we do expect 30 to 40% upside once the merger full concern goes away. Because if the merger doesn't happen, that's a 0-1 event. So the merger is very important, but from an outlook perspective also, we do see that advertising is clearly improving. H2, we expect very strong recovery.
Okay, so even from these levels, expect good gains if the merger goes through. Abneesh, good morning. Since we have you with us, I just wanted your thoughts on ITC. That's again in news, right? This morning there's a paper report in Times of India that, the hotels business might be listed separately soon. This is something the market's been sort of trying to pencil in, right? I think ITC has been one of your top picks for some time. Does that remain the case even after the outperformance?
Yes, definitely, because next negative event which can happen, which we have to monitor, will be February 1st. Till then, definitely performance will be very strong. Company has been listening to the shareholder feedback in terms of a conglomerate. So yes, company has been quite candid that once the hotel overall environment improves, they will be considering different values, ways to unlock the value. So yes, investors will like this because hotel is a very different kind of a business. So we remain positive on ITC, but yes, February 1st is when the overhang or the kind of unknown factor will come, but there is still a lot of time for that. So we remain positive on ITC.
Okay, we'll leave it at that, Abneesh. Thanks a lot for joining in. That's Edelweiss Securities with their view on the FMCG and the media space. By the way, a couple of more stocks. Tanla platform is up almost about 3% The board will be meeting to discuss a buyback. So ahead of the buyback, the stock is up 3.5%. And Interglobe that we've been talking about is down 2.5% right now on the Gangwal family selling their stake, a part of their stake, about 2.8% in a series of block deals. Otherwise, good opening expected for the market. Just about 10 seconds to go. Looks like it's going to be a gap up.
Oh, yes, it will be. And 123-point gap up. Remember, from yesterday's low, that would mean that the market would be up at Nifty almost 300 points. Well, anyway, that's the first rates now. The Nifty is up 126 points, 125 points higher on the Nifty, 133 now. So, that's clearly bullish forward in the market. The Bank Nifty is up 370. Auto stocks, once again, after 1 day of profit taking, just look at the strength in some of these names. Mahindra and Mahindra, Tata Motors, both these names doing well. Then, of course, you have Asian Paints, which is doing well, up 1.3%. ITC is starting higher. I think there's this report in the morning that, there would be this separate listing for hotels soon. Infosys is starting higher. That, I think, is, of course, taking cue from Nasdaq's recovery and also the fact that the market's betting on perhaps that buyback. Dr. Reddy's, Ekta alerted us about that. That stock is opening higher. The Nifty is holding with 134-point gains and the Bank Nifty is up 330 points. Bajaj Finserv is doing well. Today you have a rare combination of IT, banks, FMCG all firing in same direction. HDFC, Bharti Airtel, Cipla, these are few other names doing well. The Nifty is still holding firm with 127-point gain. Asian Paints, by the way, is now your top gainer. 1.5% higher on that. Not a single loser actually on the Nifty. SBI Life is just flat. That's it. But otherwise, 49 out of 50 in the green and good gains happening now in both FMCG and IT. Clearly, Infosys is the top contributor in the Nifty, followed closely by ITC and ICICI Bank. So the three eyes of the market hitting a bit of a bullseye. Over to you.
Okay, well, that's on the large caps, right? And the broader market's looking very good. The mid-cap index is up almost 1%. A couple of these stocks do deserve mention. Because of the fall in crude, we've seen a lot of the paint companies. Kansai Nerolac is a big mover, up almost about 2%. You have some of these tire companies that are also looking good this morning. Ramkrishna Forgings is up almost 4%. There is a board meet on the 12th of September to raise funds. And in any case, Ramkrishna Forgings has been doing well. So do keep an eye out on that, 4% higher there. Tanla Platforms, as I was telling you earlier, the board will be meeting to discuss a buyback. That stock is up almost about 4%. Angel One, CDSL are companies that will be big beneficiaries of the higher number of demat accounts. Remember, the total number of demat accounts have crossed 100 million in the month of August. So these stocks are doing quite well. Interglobe expectedly is down about 3.5%. And a couple of other names in the broader markets. Mid-cap IT is coming back. Persistent System, Happiest Mind, Emphasis are all up about 2 to 4%. And consumption continues to rule the roost. So you have Varun Beverages and, a couple of other names in that pocket that are looking pretty good. So good opening for the market.
I mean, absolutely fantastic. 121 points, 17,746 is where the Nifty is at right now. So Angel One is up 4% and more names are coming up with volumes. I think Persistent we mentioned, Varun Beverages we mentioned, 2.5 or higher. Sanghi Industries is up 2.33% at about 68. There is RK Forging up 4%. Action Construction Equipment, the crane maker, so that's ACE, which is up about 4% or so. Kansai Nerolac is up about 3%. Religare is up about 2.33%. Indigo Paints 2%, but again, volumes go down the list, they start to thin out a little bit. Indigo, of course, on the back of that block deal expected is down about 3.5% at this point in time, but there's nothing else. I mean, really nothing else which is coming up with any sort of volumes on the downside at this point in the day. 120, so 17,746 is where we find ourselves out. Our market master of the day is with us. Pramod Gubbi is co-founder of Marcellus Investment Managers. Pramod, great to have you with us here. Thank you very much for your time. It's always a pleasure. Pramod, so I know you kind of look at longer term sort of structural things when you look at your portfolio, the company that you own in the portfolio. But all of this, of course, is happening and the outperformance here that we are seeing in India is happening amidst a world which is kind of slowing, right? So far, we've managed to kind of ignore all of that in a very outsized way. Markets, for example, of course, the Nifty, the stock markets show that in the most pronounced way. The rupee is another one which shows that the stability in a very, very pronounced way. Any thoughts on whether if the world slows down meaningfully, it'll show up meaningfully here in India, or you think we can continue like this?
Thanks, Prashant. Thanks for having me. Always a pleasure. Look, the reason we focus on long term is for exactly these sort of reasons. Many of these developments are not particularly within our purview of forecasting or predicting. Because sheer number of factors involved here makes it that much more difficult. Even the best of economists struggle to do that. Having said that, I think whether a broader slowdown in the world will affect India, of course it will. We are living in a globalized world, increasingly so. So we will certainly get affected, particularly, say, export-oriented sectors will face that demand. If interest rates go up, capital flows and cost of capital will also take a hit. But having said that, amongst all other emerging markets, relatively speaking, I think we do stand out because fortunately or unfortunately, we don't have a thriving export sector compared to some of our other emerging market peers. We're largely a domestic market-driven market. And the events over the last 10 years or so has also meant that from a capital reliability perspective, we've also become self-reliant, right? The financialization of savings scheme that we've been talking over for the past decade or so, the move away from real estate and gold for Indian households has meant that across financial assets, whether it's bank deposits, mutual funds, equity markets, you're seeing the numbers across the board. We've seen household savings being channelized into financial markets, which in turn has brought down cost of capital. I think the numbers are quite incredible, right? We're still looking at home loans at par or in the vicinity of the 10-year G-Sec yield, whereas in the US, home loans are at almost 300 basis higher than the US 10-year G-Sec yield. So this structural correction of cost of capital is a big boost for the Indian economy, which makes us less reliant on the external world. So relatively speaking, I think we should be all right, irrespective of what will happen. There will be ways in which we will get affected, but I think we have made enough changes as far as reforms are concerned, as far as infrastructure is concerned, as far as our financial markets are concerned, to chart our own course for the next decade or so.
Okay, fair point. Yes, Pramod, good morning. That's always been the strategy at Marcellus, right? You've been bottom-up stock investors and really haven't bothered about which way global markets or index is headed. So what new themes have you identified? Have you added any new stocks that you are at liberty to discuss, in terms of your bullishness, if you could tell our viewers?
Well, I mean, our changes are very infrequent, right? Because of the sort of long-term nature of investing that we do, we tend to have very long holding periods and very little churn in our portfolios. So I'm not sure when we spoke last, but at least for the reasonably recent past, we haven't really made any changes in the portfolio. The themes remain the same. We've always been positive on domestic consumption. We've been positive on home building materials. It's our way of playing real estate, which is a structural story in India. We've been positive on financials for a fair period, and it's taken off finally, largely because of the financialization of savings scheme that I talked about, but also we reckon if there is a cyclical uptick in the Indian economy, which we do believe we're in for at least a 3 to 5 year run, then financials should benefit. And if you factor in, inflation and rising interest rates, then again, financials will be a beneficiary. The big theme, I would say, is if inflation were to stay entrenched for a while, investors need to be looking at businesses which have extremely high pricing power. Otherwise, inflation will drive down earnings. companies with pricing power will be able to pass on their input cost increases to their customers and keep their margins and returns on capital at really sensible rates. And more importantly, they'll come out stronger from this period of high inflation as high inflation hits some of their competitors pretty badly. Rising rates will hit some of their competitors pretty badly. So focus on high quality businesses, quality defined as strong balance sheets, clean governance, and high pricing power. You'll emerge out of any adverse situation from a macro perspective pretty stronger. And that's what's been our investment philosophy. Focus on protecting the downside. You'll eventually make money for investors.
So what is the big theme that you're looking at from an investor standpoint for the rest of the year, or at least for the next 18 to 24 months?
So I think financials, like I said, is a big theme, given that it plays into rising inflation and as a result, rising interest rates. And if we do believe that we are due for a capex cycle in the country, credit growth should also pick up. We're already seeing numbers that we haven't seen for a long time, 14% non-food credit growth in the banking system. I'm not sure how many of us remember seeing that sort of number. So we're clearly seeing a benefit both in terms of loan growth as well as margin expansion for banks and better funded NBFCs. I wouldn't say all the NBFCs, some of the NBFCs with very little strength on the liability side will suffer in a rising rate environment, but some of the better funded NBFCs should also benefit from that. So banks and NBFCs should definitely be a theme if this sort of recovery that we're seeing in the underlying economy stays put.
We just keep an eye on the market, because after the initial profit taking that always happens, the first 5 minutes you wait for it. Now the market's making a move, and keep an eye especially on the bank Nifty. It underperformed yesterday. It's taking out recent high 39,837, and the kind of shorts that we have in the system today could be the day when shorts perhaps are taken to cleaners, because the market absorbed the initial profit taking and just moved on. Yesterday, of course, the market did not fall, and now the market's got a big tailwind with it. Pramod, GMM Pfaudler is in news. That's one of the large investments that you have, but it's nowhere near its highs. At Masters, are you still keeping the faith in this story?
Yeah, absolutely. I mean, we do own it across all our portfolios, and we are all, as you know, all our employees are investors in Marcellus portfolio. So both us and our clients own GMM Pfaudler, and we continue to have very high confidence in the story. We're not so perturbed by short-term stock price movements as much as we would look at the fundamentals, and the fundamentals continue to be reported very strongly. It was a big bet that they made in terms of acquiring the parent company, Pfaudler, which did come with its own integration risk, but we're glad to see that 2 years hence, that integration has panned out really well, which is reflected in pretty strong order books, both locally as well as globally, and also benefits on the cost side in terms of shifting production to lower cost supply side geographies than it was hitherto. And more importantly, I think the structural transformation of GMM Pfaudler from being just a single line of products in terms of glass line vessels to providing a more solution-oriented approach towards chemical and pharmaceutical industries, which means that they'll keep adding new products to pump into the same pipeline going through to their existing customers in chemical and pharmaceutical industries, which means that the addressable market continues to expand, and therefore the growth runway remains pretty strong. It's always been an execution challenge, but the way the management has executed over the last couple of years gives us an immense amount of confidence in the long-term story.
Okay. What about, some of the other spaces that are doing quite well? I mean, we spoke about autos, the consumption theme. Auto ancillaries have done very well. A lot of the global-facing auto stocks are getting hit because of lower exports, hitting markets like Africa, etc. But domestic growth is looking very strong. In that entire universe, what is it that you still like?
Well, autos are bound for a recovery for some time now. We've had a couple of supply side challenges. We anyways entered COVID with a weak background as far as demand was concerned, and COVID put a further challenge on the supply side. Even now, I don't think the entire semiconductor shortage issue is gone, but at least it has abated somewhat. So to that extent, that latent demand that had been postponed is driving top line growth there. Some correction on the raw material front has also helped margins come back somewhat. So we should see a decent cycle, at least for the next 2 to 3 years, as far as demand for autos is concerned. Within that, I think if you believe that there's an underlying economic recovery which will drive industrial recovery, commercial vehicles should definitely do well on that front. But so will passenger cars and two-wheelers. But amongst the three, I would say commercial vehicles are best positioned within autos.
You do have exposure to some chemical stocks as well, right, Pramod? If I mean my memory is right. Do you still have them, and what's your view here?
Yeah, so I mean, we do own companies like Alkylamines, Fine Organics. Both are stocks that we own across all our portfolios for our clients as well as ourselves. Here, of course, the story is both top down and bottom up. The top down is something that we've been talking for a long time, where buyers in the West have been looking for an alternative supply source beyond China. China has dominated the specialty chemical space for a long period of time, and continues to do so. I mean, mind you, it's still almost 10 times larger than India in terms of the production capacity size. But some of that is shifting towards India. So that's the structural top-down tailwind for that sector. But within that, I think we continue to work bottom-up in terms of identifying companies and businesses which have immense amount of pricing power, which will protect them in high inflationary periods. Because remember, we still dependent on some inputs coming from China as well. And given geopolitical issues there, you will need companies which can protect themselves against those sort of issues. So the top-down macro is very favorable, continues to be so. But within that, you have to be careful in terms of picking companies which have structural competitive advantages, either in terms of the strength in chemistry or access to raw material, and have a very successful capital allocation track record. Because it's very easy to get carried away in times like this and start an unbridled expansion spree. We would like companies to expand into areas where they can extend their competitive advantages into adjacencies, and then continue to drive future earnings and cash flow growth.
Are you talking about Balaji, Pramod? Balaji, I mean, that one is expanding. I mean, large capacity expansion program. Yeah, sorry, go on.
Yeah, so we own Alkyl, which is pretty much in the same space. I think between Alkyl and Balaji, they have gained share from the other PSU companies, pretty much an oligopoly there. And they continue to generate pretty high returns on capital. So far, our preference has been Alkyl. We've owned Alkyl for the better part of the last 3-4 years, and we don't see any reason in changing a preference there.
Fair enough. Pramod, thank you very much. Great speaking with you. Appreciate you joining in with some of that perspective. Yeah, I mean, dominant players in that space. Balaji, of course, is much cheaper than Alkyl, valuation-wise. And of course, it's starting to add a lot of capacity now as well. The market's up 153 points. We're at 17,778 at this point in time. Market breadth is what? Almost 8:1. 8:1 in favor of advances is what we have. And maybe just take a quick look at what else is coming up with, big volumes right now. Yes Bank is up 3% at about 18 rupees. Angel One is up 3%. So that was up since the morning. Astral is up at 2,500. It's up 2.5%. There is Igarshi Motors, which I think is up 11%, 487 on that one. That's a big, large move on large volumes as well. So that's the one, Igarshi. Raj Ratan is up 7%. So 1365. So these are some newer names. Vinyl India is up 8.5%. Again, names we don't talk about that much, but it's all coming up with volumes. So mentioning it, Schneider is up 5%, and so on and so forth. And go down the list, volumes start to thin out a little bit. Overall, I mean, it's an up and up kind of a day with about 160 odd points on the Nifty. We'll take a quick break here. We'll come back. We have Mohit Malhotra, Managing Director and CEO at Godrej Properties, to discuss what is driving demand, are prices continuing to rise, and what does it mean for the business at Gorgeous Properties. We'll also connect with Shekhar Swaroop of Global Spirits to discuss their new capacity expansion program. Back in 2.